Ah, c'est déjà trop. So hello everyone and welcome to our HEC Paris webinar. So thank you for being connected with us today for our webinar on the best practices for startup financing presented by our professor Etienne Krieger. Good morning, Etienne. I hope you are doing well and you're in the top of your form for this presentation.
I'm fine, thanks.
Great, great. So my name is Suzanne Mathern and I am the program advisor for our Master in Innovation and Entrepreneurship. So during this webinar, we will be covering the following topics. First, I will share with you a few facts and figures about our business school, HEC Paris. Then I will cover a few highlights about our master. And next will be the juicy part, Etienne Krieger's presentation. And finally, I will say in a few words how you can apply for our master and maybe how you can taste for free our master. So if you're interested in this, please stay connected till the end. So a few facts and figures about HEC. HEC was founded in 1881 and is the second business school in Europe. HEC is the top 32 in the world for graduating CEOs of Fortune 500. And our school is well known as the first entrepreneurship school in France, especially due to its active participation in Station F, the world's largest incubator of startups. So we do have a powerful alumni network. We are known as the second most powerful business school alumni network in the world. There are actually 57,000 alumni and 96 nationalities are represented on the campus. So we have very well-known politicians in our alumni network, such as our former French President François Hollande, and so many CEOs of worldwide companies, such as Jean-Paul Agon of L'Oréal, Emmanuel Faber for Danone, and Henri de Castries for Bilderberg. So a few words about our Master in Innovation and Entrepreneurship. Well, first of all, it is 100% in English and online. So you do not need to come to our campus in Paris to study. You can study from your office. You can study from home. Our Master is hosted on the platforms of our partner, well known for online trainings, Coursera. So the duration of our training is 18 months. There are 20 courses on the whole. The first 10 first courses are for the fundamental courses, which last 6 months, and the 10 next courses are for the 12 months project-based courses, which are done throughout teamwork. We have intakes every 6 months, and the next intake is on June 24th. So why would you apply for a Master in Innovation and Entrepreneurship? Well, for example, if you have a project in your mind for creating a new company or a new product, this master is just fit for you. Maybe also you need to acquire skills to scale up your company, manage new product development, identify and implement innovation, develop a toolkit for strategy. Well, we have so many courses which can answer your needs to acquire these skills. We have courses such as entrepreneurial finance, new product development, and entrepreneurship strategy. So you need to acquire new skills with a master, but you do not want to compromise your personal and professional commitments. So we have many courses that can teach you soft skills such as boosting creativity, design thinking, organization for innovation. As I was telling you previously, a large part of our master are team project-based courses done in a teamwork. So you will work on a real case, maybe your own real case that you will have pitched to all your team members. And throughout those 12 months, you will be guided throughout your project by entrepreneurs and experienced coaches who are totally experienced in innovation and entrepreneurship. So that's about it for me. Now it is great time to get to what we've been all waiting for since the beginning of this presentation, Etienne Krieger's presentation on the best practices for startup financing.
Thank you so much, Suzanne. I'm really pleased to teach this sample course on entrepreneurial finance. So the outline will be the following. I'll talk about entrepreneurship at HEC Paris. Then we'll see what are basically the variants of financial strategies, growth strategies. What is the profit equation of a startup? What are the main sources of financing? I will give you some recommendations, and there will be a Q&A phase. Before starting, a few words about me. I'm an HEC alumni. To some extent, I never left the campus, but of course, I participated in lots of new ventures because 30 years ago, I started a program for tech entrepreneurs called Challenge Plus, where we helped hundreds of new ventures. Some of them went public, some of them have been acquired very successfully. And so I'm pleased to be co-founder and board member of several innovative companies. So my main focus is teaching entrepreneurial finance. I'm also HEC's representative for the Paris-Saclay Seed Fund, which is a 53 million euro seed and venture capital fund funding companies created by HEC alumni and other students of the Paris-Saclay cluster. And I'm also involved in other incubation initiatives because HEC has a big incubator, and we are also a member of Incub'Alliance, which is France's biggest tech incubator. Another thing that I will share with you, with the participants of this online degree, is I'm a fan of Excel. I'm a fan of Excel modeling, and so I developed lots of tools of financial modeling and financial engineering tools that I use to fuel a strategic and financial conversation with entrepreneurs, and that may help you design and model your financial forecasts. So before starting my conference, let's make a little poll about what is, according to you, an iconic entrepreneur. So there are two questions about this. The first list is a list of 5 entrepreneurs. So Andrea, can you name these persons? So there are 5 typical entrepreneurs: Elon Musk, Jeff Bezos, Jack Ma, Mark Zuckerberg, or Steve Jobs. So the poll is open, and you will get the results at the end of our conference. So these guys are all well known. Impressive response rate. So let's take a few seconds in order to go up to, yeah. Okay. Thank you, Andrea. And so a second list now of less well-known entrepreneurs: Jan Koum, Travis Kalanick, Oliver Samwer, Jean-Baptiste Rudel, or Richard Hendricks. Some of you may not know who is Jean-Baptiste Rudel, but I will explain that at the end. So famous entrepreneurs, even if one of them is a fictional one that probably some of you know because there is a high response rate for the last one. Okay, and let's now move to a similar quiz, which is about, could you please name an iconic startup? And so we'll take a list of startups created by the 5 first entrepreneurs. So what is, according to you, the typical startup? Is it SpaceX? Is it Amazon? Is it Alibaba? Is it Facebook? Or is it Pixar? Pixar, that was created by Steve Jobs, as you all know. Wow, okay. Thank you so much. And last quiz, again, less well known, but most of them are. Do you have a list of iconic startups? WhatsApp, Uber, Rocket Internet, Criteo, or Pied Piper, which explains the reason of the last entrepreneur. So if you saw the Silicon Valley movie on HBO, you know what is Pied Piper. So what is a typical startup among this list? Okay, thank you so much. And so Andrea will display the results at the end of my speech. And let's talk about entrepreneurship at HEC. At HEC, we love entrepreneurs because HEC has been created by entrepreneurs, by the Paris Chamber of Commerce, and its development has been fueled by lots of entrepreneurs like Philippe Fauriel-Destezé, who created temporary work and who is a billionaire and who is the worldwide leader of temporary work. Pierre Bellon, who has a company of 400,000 persons, and most younger entrepreneurs like Pierre Kosciusko-Morizet and Nathalie Gaveau, who created Price Minister that was acquired by Rakuten Group, and lots of other entrepreneurs, and I hope you. And it's really an increasing trend, and I will quote some recent entrepreneurs like Victor Lugère and Tigran Sedou, who created Big Mama, and this company 3 years after creation, after inception, is doing tens of billions of euros of revenues and opened 10 restaurants in Paris, in London, and they have more than 1,000 employees. Point Vision Group has been created by EMBA alumni, and they have automated eye exams, and the company is also highly growing and profitable, making more than 75 million euros revenues. And so we really love entrepreneurs because they are really stimulating, and they are constantly crossing the borders of imagination. So in fact, we support more than 200 startups every year. This figure has doubled in the last 5 years because we opened an incubator at Station F, which is Europe's biggest incubator, biggest startup ecosystem. And among Station F, we have the biggest incubator where we constantly follow up and support 70 startups. And so if we also take into account other programs like HEC Entrepreneur, like this online master, like the Challenge Plus program I founded 30 years ago, we really support more than 200 startups, and some of them are growing fast. Some of them also fail fast. That's the name of the game. But that gives us a very good experience base and a big network of entrepreneurs and would-be entrepreneurs. So your entrepreneurial journey at HEC can be divided in two steps, what you can do during your studies and what you can do after graduating. So there are lots of initiatives to spread awareness. So there are conferences, content, success stories, lots of resources you can already find on our website, but we also organize conferences with successful entrepreneurs. We also organize failed conferences about failed entrepreneurs. And after graduating, as Suzanne recalled, we have a very active alumni organization, and there is a hub about tech companies. There is also a hub about entrepreneurship with thousands of members. So during the program, of course, there is the certificate phase, there is the master itself, and there is a team project where you definitely can work on a real project, on a real business plan. You can pitch your project, your idea. You will get some feedbacks from tutors, from experts, from yourselves, and so that's the essence of this online master. And the support phase, which you can also benefit from, is there are 3 startup office hours on the campus every Thursday afternoon. Of course, if you are not on the campus, we can do that on WhatsApp, on Skype, and so on, or on phone. And I'm currently, I try to be present every 3 weeks in order to discuss with entrepreneurs, because it's definitely great to discuss about projects, about growth dilemmas, about equity allocation, about business model, about customer acquisition costs. We also organize conferences in order to help you find associates. So, for instance, Sackler pitch nights, in order to find complementary team members, CTOs, CEOs, and so on. As I said, we run this incubator at Station F, and we are also a member of this financial initiative, which is the Paris Sackler Seed Fund, which is the seed and venture capital fund. So there are, of course, lots of our resources, but you see that there are lots of structured support in order to help you design, execute, and grow your business. There is another trend. There are lots of recent trends. One of these trends is that students are creating companies even while studying on the campus, and so we had to adapt our pedagogy in order to help you, in order to provide you feedbacks, and that's why we made these office hours. That's why we run elective courses. That's why we are going increasingly digital in order to provide you that kind of resources. And there is another trend, which is a growing interest, not only in making money, but also in making sense. And so that's called impact entrepreneurship and impact investing. So having an impact, an environmental and a social impact. And so there are also lots of HEC alumni who are active in impact entrepreneurship and also in impact financing. So like Nicolas Hazard, who created after graduating a consulting company and an impact investment and $150 million impact investment fund. And my colleague Bertrand Badré, who started his career more traditionally as the CFO of Société Générale, which is one of the French world leading bank. Then he was the CEO of the World Bank, and recently he created Blue Orange Capital, which is an impact investment fund. So there is an interest in running, developing impact companies and also financing them. So let's talk about financial strategies. So all of your companies, the companies that you are working in or the companies you will create can be displayed on this graph. So either you create your company and you generate free cash flows, you pay yourself dividends, you acquire companies, you go public, and everything is fine, or you have directly to make some capital infusions in order to fund research and development, marketing, and at the end of the day, you'll have to consider also options like initial public offerings, so stock markets, or being acquired. But at the end of the day, you will also have to generate free cash flows, and it may take years, as you'll see in my course. So I tried to summarize this quest for cash flows in one slide. I had the privilege to have Pierre Vernimen as finance professor, and I learned that it's all about cash flows, and your company's value is nothing else than the discounted value of your future cash flows. So the problem is that nobody knows precisely what will be your future cash flows, but this slide explains you why some loss-making company like Uber, like Tesla, have enjoyed huge valuation, because the financial community expects that this company will be true cash cows and will generate huge profit. And so the expected return again is the standard deviation of your future profits, and the risk is the standard deviation of these future profits. And as an entrepreneur, you will have, of course, in order to compensate the risk, which is huge, you will have to serve an additional premium in order to compensate the risk for investor to lose everything. So this investor has to expect to win a lot. And there is also, you will also have to serve an additional premium because your company will not be liquid. If I have some shares of a biotech company, which is, for instance, the case, I was co-founder of a biotech company 13 years ago. So you have to wait, you have to be patient, because if you want to sell your shares, nobody will acquire them immediately. And if the company has reached some thresholds, then you will have the option of selling the company or of going public. And so again, it's risky and it's all about generating cash flows. And so to put it simpler, as an entrepreneur or as a CFO, you have to share future capital gains and future cash flows among several stakeholders, among investors, inventors, managers, employees, and of course the state. But the state at the beginning will probably help you. And of course, there are also issues of sustainability and other issues of value creating and sharing. But you will have to create future cash flows, and so you have to make people dream with you and believe in you and fund your company, because at the beginning your company will need some cash. So this slide shows that it's more problematic than expected, because the average return of venture capital in the world, here I focused on Europe, is low. So the expectation to make money is not very high, and definitely the risk. So the second part, the standard deviation of profit, the risk is between losing everything and sometimes winning a lot. And venture capital is obviously more risky than development capital, where you fuel companies that know how simply to scale their operation. And the liquidity, as stated before, the liquidity is low, and you often have to wait 5 to 7 years before getting any money. Of course, if you lose everything, the liquidity is faster, but then your shares are worth nothing. So it's a very demanding game, and the risk is high. So if you begin developing a company, if you begin modeling the future sales, the future profits, and the future cash flows, you will have to go through what is called the profit equation, which is the financial translation of your business model. And basically, it's forecasting a number of orders, but which ones, which customer, which typical customer, what is the average sales per customer, so what is the business model, what is your pricing strategy. All that will be addressed during the course. And so at the end, this will generate a negative or a positive, a profit or a loss. And what will communicate with your financial plan is the cash flow, which is the cash your company would earn if you were paid directly and if you paid your suppliers directly. And so that's net profit plus the depreciation. And then we'll have to move to the financing plan. And again, as an entrepreneur, and more precisely as a CEO and a CFO, you have to anticipate, you have to balance this financing plan. So if you directly generate positive cash flows, there is no problem, but you also have to finance capex, and you also have to finance a change in working capital requirements. But if your cash flows are negative, you also have to finance these losses, and you have to find the proper resources in order to balance your financing plan in advance. Because if you are looking for money while you are out of cash, generally nobody wants to fund you. So this equation is quite simple, but it's a bit tactical, and you have to anticipate some elements, and some sources of financing are more available than other ones at very early stage, and that's what we are concerned about if we focus on the startup and seed phase. And so there are lots of sources on financing. Basically, there are really development capital, asset sales, tax credits, extra activities. But if we really focus on startup phase, the number of available sources of financing is much more limited. And so you really have to be creative, and you really have to be convincing to start your operation and to bootstrap your company. So let's move on some conditions to get some aid, some financial support. Of course, it's linked to your cash flow or your future potential of cash flow generation. It's also linked to your available equity. Sometimes you will get some subsidies, but it will be strictly limited by the amount of equity you have. It's also basically linked to the credibility of your business plan, and we'll see that the credibility of a business plan is essentially linked to the credibility of the team, and what are the key components of a winning team. That all will be addressed by the course. And as I said, the quality of the team, which is an essential criteria. So that leads us to the initial dilemma of equity allocation. If you create a company, so some Grande École students of HEC generally create a startup with 1,000, 2,000, 5,000, 10,000 euros or dollars. It's not a lot of money. And so the sharing of the pie is something tactical. The sharing of the initial pie between the CEO, between the business people, between the CTO, between the financial persons, is something very subtle, and we will also share with you some good practices about equity allocation. And I also designed an Excel sheet in order to fuel the discussion. But that's a very important element, and only then you will make capital increases and you will attract friends and family, business angels, or venture capital funds. And essentially, you will see a business plan is not very complicated. At the end, the best business plans are the ones that seem to be easy, because there are 10 points, not more, that have to be addressed, but they have to be addressed in a very simple, in a very current and consistent way. And basically, fundraising is being conscious of technical and commercial milestones and synchronizing your fundraising with the main technical and commercial milestones. It's not complicated, but it's complex. So you have to anticipate that. You have to take into account some constraints. You have to deliver what you say. You have to avoid of being out of cash, and you have to look money while you do not need this money. So, but it's basically the art of synchronizing fundraising with key technical and commercial milestones. So bank financing, basically for startup companies developing technological assets, is not very available. So of course, if you are opening restaurants, stylish restaurants like Big Mama, you may leverage with bank financing, but generally you will not have lots of bank financing at the very beginning, with some exceptions like banks like BPI France, or banks that really focus on innovative businesses and have their own risk compensated by other mechanisms. So, but you will see generally you'll soon have to move to customer financing and equity financing. There are some very interesting mechanisms for especially for tech companies, like subsidies and tax credits. For instance, in France, we have an innovative venture status, statut jeune entreprise innovante, that cuts a lot of social costs and gives you some tax advantages. And there is another mechanism. So there are tax credits for research and innovation, which may impact your P&L for tens or even hundreds of thousands of dollars. And so these mechanisms have to be well known, well mastered. And as a co-founder, as a financial person, you may rapidly add some value and bring a lot of money in order to fuel the development of your company. But definitely the main room for maneuver is equity, but this new equity allocation is framed by strict criteria and ratios, and there is definitely no limit for capital increases. Currently, there is a lot of money available, of venture capital, of development capital money, and some companies are raising not even millions or tens of millions of dollars, but hundreds of millions of dollars, sometimes of pre-IPO financing, and sometimes after IPO, even more equity. So there is really money available for ambitious and credible projects, and we'll address all these actors of venture capital and development capital. I summarized here the structure of an investment memorandum. So if we look at projects, at startups that are candidate to the Paris-Saclay Seed Fund, the Seed and Venture Capital Fund, you'll see that there are about 10 points that are addressed. So we get a slide deck like the one that you will prepare at the end of your team project, and then the partner of one of the investment directors of this venture capital fund presents an investment memo, which is sometimes not longer than 5 or 6 pages, but focusing on these elements and essentially the team, the IP, the market, which has to be a huge one, which has to be precisely defined, and what are the current metrics, the traction and the sales pipeline. So even seed funds, if there is no traction, if it's only slides, PowerPoint, and things like that, it will be difficult to move to excite some financial backers. But what happens currently, if your company is very credible, you will have numbers of offerings, and your valuation, your pre-money valuation, will increase, and your dilution will be optimized, and that these notions will of course also be addressed during my course. Let's take the example of Cellectis. Cellectis is a biotech company which is a pioneer on genome engineering. This company has been created more than 10 years ago by two participants, two entrepreneurs who participated in one of our programs at HEC. They have developed a platform, not only a molecule, but a platform enabling cut and paste at DNA level in order to industrialize genome engineering. This company has huge growth prospects. It was a very demanding journey, and this company has started with 2 million equity financing, then an additional 16 million. Then the company went public on the French stock market, and then they raised an additional 20 million plus 50 million. At the end, they also went public on the Nasdaq, on the American stock market, and the cumulated capital infusions were more than $600 million. So you need, in order to fund such a company, you need a lot of equity, but at the end, you create something that will industrialize living organisms. So a very interesting adventure. There is also another phenomenon. I was quite skeptical at the beginning, which is crowdfunding. So I suspect that all of you crowdfunded something or tried to sell something in crowdfunding. So it works because in crowdfunding, there is the crowdsourcing part. So it's the wisdom of the crowd. And sometimes it helps you finance, so get some feedbacks, raise some equity, get some debt, and also sometimes pre-sell some products. So it works. Sometimes there have been some excesses, like Lily drone, which is a drone which was presented as very disruptive and sold for less than 500 euros, and the company never was able to ship this drone. So there have been more than $30 million pre-orders, and at the end, the company crushed, and the assets were bought by another drone company. So it's an interesting phenomena you may consider while starting a business, because it provides you wisdom from and feedback from the crowd. So to summarize, again, on a financial point of view, to summarize these different growth strategies and financial growth strategies, I may distinguish an ultralight aircraft, which is a company that develops immediately. You make some sales. We, for instance, have two entrepreneurs that created a company called Crazy Voyage. They are organizing bachelor events, bachelor parties, so very bad trips, and the company was immediately profitable, and they now have more than 50 employees, but they started only with their own funds, and that was okay. On the other hand, if we look at a company like Cellectis, or if we look at Big Mama, you need much more money to start your operation, so you have to share your equity, but it's not the same journey. It's also more demanding, and at the end of the day, it's your choice. It depends on the market. It depends on your risk aversion, and it's up to you to invent the type of company, the type of activity you want to be in. So just a few words about a survey we made some years ago with entrepreneurs, tech entrepreneurs, and you see we just asked them two questions. The first one was, what did you remember main, and what they remembered once they forgot everything. And we see that our messages, our obsession about cash has well be understood and remembered, because some of them quote this saying according to which cash is more important than your mother. Your mother is very important, but cash indeed is very important. Cash is king, and you will also have the shareholder you deserve. If you have lousy shareholders, you probably had a lousy business plan and a lousy team. So that's a bit ruthless, but it's true. And the other one, the other question was advice to entrepreneurs, and I love this. This one is customer money is better than money from financials. So don't forget to pre-finance yourself with customers. If you have a very compelling offer, you'll probably sometimes not even need any VC. You will not be able to do that with a biotech company, of course, but don't forget that, and always be vigilant about cash again and again. So I don't know if you have any questions. I will, of course, be happy to discuss with you, to discuss with some candidates, and I hope I will meet you in person on our discussion forums in my entrepreneurial finance course. But I think now we'll also display, before giving the mic to Suzanne, the results of our two quizzes. Yeah, do you have it? Yeah, so the poll results. So the typical entrepreneurs, Elon Musk. Yeah, Elon Musk is definitely an amazing guy. Jeff Bezos also. Jack Ma, the founder of Alibaba. Mark Zuckerberg. And even if he's dead, Steve Jobs is still an inspiring person. Thanks a lot. So the other quiz was about... the other list of typical entrepreneurs. So I think lots of you saw the TV series Silicon Valley, because you remember Richard Hendricks, which doesn't exist in reality, but who is the founder of Piper. Jan Koum is a very interesting story, because this is the founder of WhatsApp, and this company, a few years after creation, was acquired for $19 billion by Facebook, with only 50 employees. So there were lots of people became billionaires or millionaires. So Travis Kalanick, the founder of Uber, Oliver Samwer, the founder of Rocket Internet, and Jean-Baptiste Rudel, the founder of Criteo. And so if we move to the typical startups. So the other polls. Thank you, Andrea. So Amazon is inspiring you, followed by SpaceX and Facebook, and then Alibaba and Pixar. Pixar, I took Pixar, not Apple, because it was a huge success created by Steve Jobs. And so the other slide. WhatsApp, definitely amazing success. Uber, Unless Rocket Internet, Criteo, and Pied Piper. So I don't know. Do you want us, Suzanne, to move to the questions now? Are there some questions on the discussion forum? Or then I will of course be happy to discuss with you. Yeah, trying to develop a biorefinery, highly technical, capital intensive. How would you finance? So capital intensive companies are definitely a dilemma to be financed, because you have to find patient equity. So investors like business angels, and then sometimes pre-financing companies, but often very capital intensive companies have difficulties finding traditional venture capital that will mostly focus on digital companies that can grow fast. So it's doable, but you have to be patient, and you have to juggle between subsidies, state subsidies, refundable advances, equity from business angels. If there are some assets, you may switch to bank loans, but definitely try to get some customer pre-financing. Otherwise, it will be very difficult. Will I be sharing Excels? Yes. I created a range of tools, and these tools are sold, and I get some royalties out of it. But during my course, I have adapted these tools. I have translated them in French and in English, and you of course may use that as tools in order to model your financial forecast, and also to do some financial engineering calculation. So you will have that on during the course, of course. What are the common reasons for businesses to fail? Well, there are lots of reasons. The most common ones are pertaining to the team, not having a complementary team, people who are not complementary in terms of competencies and in terms of tempers, who do not work hard. So I can give you lots of examples where companies rapidly disappear, which is sometimes good news, because it's not necessary to take years to see that it will never take off. And so it's linked to team reasons. It's sometimes linked to a market which is not existing, which teams focused on something which is more nice to have than must have, which leads us back to the pain point and the value proposition. Is there some value that is really created for a given segment? And that will be addressed specifically by my colleague Frédéric Iselin. And of course, there are also technological reasons. If the product doesn't work, if you develop a molecule and it fails, and you do not pass clinical trials, so then the company is dead. That's the name of the game. But it's basically linked to teams, to market issues and business model issues and technical issues. Of course, there are lots of other failures. No cash equals liquidation. Yes, unless your company, if financial backers continue trusting in your company, you will be funded, and your company will ultimately be a cash cow. If you look at a company like Uber, for instance, this company made $4.5 billion losses last year, and it's current valuation is about $50 billion. So a loss-making company can be valued a lot, and some people may be eager to finance it because they think, they anticipate it will be a huge success. But if for some reason current shareholders do not trust you, do no more trust you, and you fail attracting new financial backers, it's the end of the game. So that's true. No cash leads to liquidation. The best investor is the good client with the good margin. I totally agree with you. Thanks a lot for this comment. What is the interest of your training for a French charter accountant? I will probably not learn you anything about accounting, but finance is not only accounting. It's anticipating future cash flows. It's crafting a winning business model, a winning team, and so it's far more than figures. And you may wonder that most VCs do not even look at very early stage at your financial projections. They will look at the main requirements and what is required to reach the next step. But and of course they will consider some issues about customer acquisition cost, about customer lifetime value, and at the end it leads to the anticipation of a financial forecast, of a profit and loss statement, and of a cash flow table. But the mindset of an entrepreneur, the mindset of a business angel, of a VC, is very different than the one of a chartered accountant who has to account very precisely what the company is doing. And it's another mindset. It's a complementary one, and I think this training may also be of interest for a chartered accountant. So okay, I think there are lots of questions. I thank you very much for all these enthusiastic comments. I hope I will have the opportunity to discuss all that, and lots of things are of course addressed in my course and in other courses. But I know it's time for me to leave the mic to Suzanne, and I thank you very much for your attendance.
Well, thank you, Etienne, so much for this great presentation. It was really extremely interesting. So before I continue my presentation, I just wanted to maybe, Andre, if you can start a poll. We want to know more about you. Why are you here? So if you could kindly answer our poll, and we are very curious to know why you're here with us. Okay, next slide. There. So yes. Okay, so now that you have listened with great attention to Etienne, I'm sure you're curious to know more about the topic and maybe even listen to his masterclass and the masterclasses of our other teachers for our master. So maybe some of you are wondering, if I could have my slide back. Thank you. How can I apply for this Master in Innovation and Entrepreneurship? Well, first of all, you need to have 5 years minimum of professional experience. You have to be proficient in English, which is obvious since the course is 100% in English. And you need to have 20 hours per week available to work for our HEC Master. And most of all, last but not least, you need to have an entrepreneurship and innovation spirit, very important for our project-based courses. So the price of our Master is 20,000 euros. It can be paid in several installments. And maybe you do not have the profile or the funds yet for our master. Well, in this case, you have the option to start first with our online certificate, which covers the fundamental courses of our master, and later on progress with our master. Also, another option, maybe you're getting a new interest for our master right now after Etienne's presentation. So you can get a taste of our master for free through our MOOCs and through also our very reasonably priced specializations. And all these options are available on the Coursera platform. So I invite you to go and take a look if you are starting to find that you are having an interest for our master. So thank you so much, everyone, for your attention. Thank you, Etienne, for this great presentation. That was really fun. Please note that we have these dates. Our next jury date for those who have started an application for a master is on May 15th. And for those who are starting to think and want to start an application for a master, the next cohort is starting on June 24th. So that leaves you plenty of time to finalize your application before that. So we'll be most happy to answer all your queries. You have my name here, Suzanne Mattern, my landline, and our email, and we'll get back to you as soon as we can for all these your different questions and queries. Etienne, thank you so much. It was lots of fun, and bye-bye, everyone.